All right, requested by many folks, credit scores. What is a credit score? Why does it matter? Well, having good credit is an important part of personal finance. If you want to borrow money, you will need good credit. If your credit's bad, you might not be able to get credit, or the interest rates that you'll be offered are going to be higher, or you might have to put down a bigger down payment on a big purchase or be unable to make it at all. Sometimes employers will even conduct credit checks as part of the hiring process. And if you've not demonstrated financial responsibility through a high credit score, a prospective employer might say, I don't know if this is the right fit. There's many types of credit. The two most common types are installment loans. So we'll do the two types here. Installment loans. These are things where you have some balance that goes down over time. And then secondly, what we call revolving credit. And you can probably imagine what goes into each category. Under installment loans, this would be like a car loan. A mortgage is an installment loan. A student loan is an installment loan. And then a revolving credit would be something like a credit card where you might have a balance, call it $10,000. If you use $1,000, you have $9,000 available, but then when you pay that off, then you go back to having the $10,000 available. What is the point of understanding these types of loans in the context of your credit score? Well, how is the credit score calculated would be the first thing that is important to mention. If we imagine a sort of circular pie chart, about 35%, I don't know if that's exactly 35%, this is your payment history. This means, do you pay on time? Have you had late payments, etc.? 15% is what we would call the length of your credit history. How long have you had accounts to your name? 10% is new credit. How much new credit have you been extended? And then 10% is credit mix. And I have not, and I've actually forgot one here altogether. So 10%, let's draw that much smaller because that really was not 10%. This is what we would call mix, the mix of the types of credit that you have. And very, very importantly, amounts owed, which also relates to credit utilization, is about 30%. And then this is 35%. So what does this really mean? Well, payment history means paying on time. Do you pay on time? It's that simple. Amount owed is whether you're using too much of your available credit. Imagine that across all your credit cards, you have $20,000 of available credit, and imagine that you regularly have $15,000 on those credit cards. This is a credit utilization of 75%. That's high. And so this might make it less likely that another lender or creditor would extend you credit. The thought process would be, if this person already needs 75% of all the credit they have available, they may be a higher risk for not paying back what they owe. As I mentioned, length of credit is how long you've had your accounts. Credit mix is what's the combination, right? Credit cards, car loan, mortgage, etc. And then new credit relates to opening new accounts. When you have what are called credit inquiries made on your account, like for example, if you apply for a mortgage, they do a credit inquiry. Credit inquiries can temporarily reduce your credit score as well. What are the scores? Well, the scores basically range from 300 to 850. If we want to kind of categorize these, 800 plus is considered excellent. And then you've got 740 to 799 all the way down. If you are below 579, it's considered poor. So you really want to stay above that. Not that you are poor, just that it's a poor credit score. Who controls or holds these credit scores? There are 3 bureaus. These bureaus are, and you've probably heard of some of these before, Equifax. That's the one that had the big breach a few years ago. TransUnion and Experian, okay? Your credit score will sometimes differ slightly from one to the other, so it's worth checking out all of them. What can you do to maintain a high credit score? Well, you have to work backwards from what it is that increases the score. Number one, pay on time. There was a time where it was said, oh, leave a little bit of a balance on your credit card each month and then pay interest on it, but just make your monthly minimum payments. That'll help your credit score more. My credit score is over 800. I've never done that. I always pay my credit card in full. I see no reason to pay interest by not paying your balance in full if you can afford it. So just pay it in full every month if you can. Secondly, don't apply for too many new credit cards or loans at once, because the inquiries will bring down your credit score. So don't do that. Try to use a relatively small portion of the credit that is available. Now, easier said than done, right? If you've got a $2,000 credit card and you're struggling to make it to the end of the month, it's quite plausible you're going to use almost 100% of that $2,000 credit card. But this is the goal. Don't try to keep your credit utilization rate relatively low. And keep an eye on your 3 credit reports, which you can do free. If you search for free annual credit report and free annual credit score, you can look to see, are there inquiries on my credit report that I didn't make, which would suggest maybe fraud or identity theft, and you've got to work on getting those removed, which is an entire other video. And keep an eye on whether there are accounts there that you don't even have any awareness are open. They're really your accounts, but they're really old. Now, that last thing maybe is for a different video. There's a debate as to whether it's good to close accounts you aren't using. The reason not to close accounts you aren't using is that even if you're not using them, more open credit card accounts increases the total credit available to you. When you increase this number, it decreases your credit utilization. That's an argument for keeping open accounts even if you're not using them. I tend not to do this because I don't like the idea of credit accounts that I don't use or think about nor need just kind of floating open in the ether. So this includes like store cards or credit cards I used to use but don't use anymore. I'm comfortable enough that my credit utilization rate is low enough that I close those. But there are some who recommend not doing that. Research that yourself. It's really a topic in and of itself. This is the big picture of credit scores and how they work.